Okay, so today we're strapping on the helmets, right? We're diving deep into Shoei. Yeah, Shoei, the helmet company.
A classic?
Yeah, you sent over a bunch of their stuff, their financials, like the big picture consolidated ones, and then the separate, just SJAI numbers, and then, their whole investor presentation thing, too. All for the year that ended September 30th, last year, 2024.
Lots to dig into.
Totally. And what we really want to do, right, is figure out what's the deal with SJAI, how they do, where are they going? What should we be, watching for? We'll hit the main parts of their business, the money stuff, how they treat their shareholders, that whole thing. You ready?
Let's crack it open.
All right. First off, something they talk about a lot is the whole, market situation. It seems like that motorcycle craze, that big boom we saw, right when COVID hit and right after, it's chilled out.
Thanks, sucks.
Yeah. They're saying things like, the weather hasn't been great and the economy, well, it's not exactly helping people buy more motorcycles.
Mm-hmm.
Oh, and they mentioned this thing about inventory, right? Too much of it sitting around at the distributor level, especially in Europe and China, at least until the middle of last year.
Interesting.
Yeah, kind of a bummer. But then they also say, hey, more people are walking into retail stores since early spring last year, so maybe things are picking back up.
Huh.
Of all that, what jumps out at you? What's the big deal there?
I think that inventory thing is really important, right? It shows how tricky it is for these companies, even a big name like Shoei, to guess how much people will want to buy, especially after a weird time like the pandemic where everyone went a bit nuts for motorcycles for a while.
Yeah.
And it's not just anywhere, right? It's specific places, Europe, China. So maybe there were some unique things happening there. Maybe their supply chain, how they get helmets from factory to store. Maybe it just couldn't adapt quickly enough.
Ah, okay.
But yeah, the good news is people are going back to stores, right? So that interest, it's still there. People still want helmets, at least.
So true. Okay, so let's look at how all this market stuff played out in their actual sales, region by region, for that same year, ending September 2024. Overall, the number of helmets they sold, it went down.
Uh-oh.
Yeah, by 8.4% compared to the year before. But get this, different places, totally different stories. So Europe, down 7.8%, and they blame that inventory problem. But they say their new helmets, the Neotech 3 and the GT Air 3, those helped a bit.
The flagships.
Exactly. Now, North America, get this, up a whopping 34.7%. They say it's because they've got some popular models over there and, well, the U.S. economy was doing pretty all right.
Yeah, for a while there.
Then Asia, a big drop, 28.8% fewer helmets sold. China's the main culprit, down 32.5% because of that inventory mess.
Ouch.
Right? Japan, a tiny dip, just 0.4%, but they still point to a little bit of extra inventory hanging around, even though people were still buying at a decent rate.
Okay.
But here's the twist. Even though they sold fewer helmets overall, the money they brought in, their net sales, it actually went up.
Really?
By 6.5%. That's 2.17 billion yen more, hitting a total of 35.79 billion yen. They're like, yeah, because our helmets got more expensive, those new models, some price hikes here and there, and the yen, our currency, it wasn't doing so hot. So when you look at the sales money, by region, North America just pops out, 42% increase. Then Europe, still good at 12.8%. Even Japan, 8.8% up. Asia, though, that's rough, down 21.4%. So what do you make of this whole regional roller coaster?
It's crazy how those two things can be so different, right? Selling fewer helmets, but making more money. That's the power of a brand, right? Shoei, they can charge more and people still buy.
Premium helmets, premium price, yeah.
Exactly. North America, man, they love their Shoei's. Makes you wonder, is it specific models doing well there? Or just their whole marketing game is super strong? And Asia, especially China, that needs some attention. Inventory is part of it, but they need a plan to get back on track there. But hey, Europe's still making more money, even with fewer sales. That shows those new fancy helmets, they're working, pulling in higher prices. And yeah, the weak yen, that helps too when you're selling stuff overseas.
So what's their plan? How are they tackling all this and trying to grow?
Lots going on, actually.
Yeah, tell me.
So product-wise, those new helmets we talked about, the Neotech 3 and the GT Air 3, they're pushing those globally.
Right.
And they're doing this new thing, BMX competition helmets called the XGRAD. They want to hit Europe and the US with that one.
Oh, interesting.
For sales, big focus on Asia, especially China, right? Got to understand the market better, support their dealers more, all that. They're also pushing this personal fitting system, PFS, where you can get a custom fit helmet. Super fancy. Now, production, they're all about efficiency, using this Kaizen thing, continuous improvement, and JIT, just-in-time inventory, so less waste. And get this, they bought land next to their factory in Ibaraki to build a new warehouse, finishing this December, all to make things smoother.
Huh.
They want to pump out 650,000 helmets next year. That's their goal.
Wow.
Brand-wise, they're building this Shoei helmet park opening in spring 2026. It'll be a museum, showroom, shop, restaurant, the whole shebang.
That's ambitious.
Totally. Plus, they renewed their deals with the Marquez brothers, Mark and Alex, the racers.
Oh, yeah, of course.
Big names. And ESG stuff, they're all over that. Environment, governance, social contributions. They've got initiatives for everything. So, what do you think? What stands out to you in all this?
Well, their product plan seems pretty smart, right? Beefing up their motorcycle stuff and trying new things like BMX.
Yeah.
The Asia focus makes sense. Huge potential there, even with the bumps in the road. And that PFS, the custom fit thing, that's cool. Gives them an edge.
Yeah.
That helmet park, man, that's a big bet, right?
It is.
All about the brand experience. And it's good to see them actually caring about efficiency and ESG.
Absolutely.
Those are important these days.
Yeah.
Now, no business is all sunshine and rainbows, right?
Not even close.
So SHOEI, they're straight up hey, there are challenges.
What are they worried about?
Next year, ending September 2025, they're saying sales and profit both down. They blame, the market's slowing down, no big new helmet releases planned, and oh yeah, they think the yen's going to get stronger.
Ah, the currency game.
Right. Plus, China's economy being wobbly, that's not helping. And they still have to deal with some leftover inventory in Japan.
Yeah.
They even listed a bunch of, what if bad stuff? What if the yen gets even stronger? What if there's a recession? What if the new helmets don't sell well? Natural disasters, even import taxes going up.
And covering all the bases.
Totally. So how do these challenges match up against all their growth stuff, Do they have a chance?
That drop in sales and profit they're expecting just shows how tough things are right now. And no crazy new helmets this year. That's probably smart. Milk those Neotech 3 and GT Air 3 sales before they shake things up again. But that strong yen, man, that hurts when you're selling stuff overseas. And China? Yeah, that's a big question mark hanging over everything.
It is.
Their long-term plans, they sound good, but they got to handle this immediate stuff first. We'll see what happens with Asia and those new businesses they're cooking up. Those are the things to watch.
Let's get into the money details, the numbers.
All right, time for some fun with financials.
So net sales, that's the money they brought in, up to 35.79 billion yen, like we said. Operating income, that's their profit from running the business, that's up to 5.1% compared to the year before. So they're at 10.33 billion yen there. And they explain it's because they were able to charge more per helmet, which made up for selling fewer helmets overall, and for the cost of making those helmets going up too. Then ordinary income, a little different way to measure profit, up 6.5% to 10.5 billion yen. And the profit that goes to the owners of the parent company, that's 7.38 billion yen, a 4.4% increase. Now their balance sheet, which shows what they own and what they owe as of September 30th, 2024. Total assets, everything they've got, that's up to 35.09 billion yen from 32.81 billion the year before. But their liabilities, what they owe, that actually went down a bit to 5.54 billion yen from 5.66 billion. And their net assets, what's left after you take away the liabilities, that's bigger too, 29.55 billion yen from 27.15 billion.
Nice.
Yeah. Their equity ratio, that's how much of their stuff is owned by the company's owners versus owed to someone else. That went up a bit to 84.2% from 82.7%.
Very healthy.
Oh, yeah. They've got a ton of cash and deposits just sitting there, up to 15.35 billion yen. And their property, plant, and equipment, that's up too, probably because of that land they bought and all the factory upgrades they're doing. What do you think of all this?
Their income statement, the profit stuff, it's clear they're making more money even while selling fewer helmets.
That's impressive.
Super impressive. They're a strong brand. People pay for that. Operating income up, that's great. Shows their business is healthy.
Right.
Balance sheet, man, they look solid. Big net assets. That equity ratio is super strong. Not much debt at all. And that pile of cash, that gives them options, invest, weather a storm, whatever.
Yeah.
And all that spending on factories and equipment, that makes sense with their plans to make more helmets.
Let's move on to the cash flow statement for that same year, ending September 2024. The cash they made from just doing business operations, that shot up to 9.79 billion yen, a big jump from 6.36 billion the year before. But the cash they spent on investments, that was negative, 3.28 billion yen out the door. because of all those factory upgrades and whatnot.
Makes sense.
Right. And the cash flow from financing activities, also negative, 5.72 billion yen, mostly because they were buying back their own stock and paying out dividends to shareholders.
Smart moves.
Yeah. Free cash flow. That's the money they have left over after paying for all the investments. That was a healthy 6.51 billion yen. What do you think? Are they doing well with their cash?
Oh, yeah, absolutely. Their core business is pumping out cash. That's a good sign. The negative investment cash flow, well, they're growing, so that's expected. And the financing stuff, that's them rewarding shareholders, which is what they should be doing. Free cash flow, that much of it, that's freedom. They can do a lot with that.
So SHOEI, they really highlight that the reason they did so well in 2024 is because they're able to raise those helmet prices thanks to new models, just plain price increases, and that weaker yen.
Right. It all added up.
It did. It made up for selling fewer helmets and for costs going up. Now, looking ahead to the year ending September 2025, their forecast, while it's not as rosy, they're predicting net sales to go down by 5.2% to 33.92 billion yen. Operating income down 15.1% to 8.77 billion, and profit for the parent company down 15.7% to 6.22 billion.
Not great.
Not great. They're saying it's because they expect to sell about 4% fewer helmets, and big one here, the yen's supposed to get stronger, making their stuff more expensive overseas. They're basing this on exchange rates of 145 yen to the dollar and 160 to the euro. Currency, it's a big deal for them.
Huge deal. Their forecast, it just screams how much those exchange rates can mess with their numbers, you know? Global company, global problems, fewer helmets sold, plus a bad currency swing, that's a double whammy on profits. Makes their strategy of selling more in places less tied to the yen, like North America, even more important.
Absolutely. So how are they going to keep their shareholders happy with all this going on?
Well, they've got a plan.
No?
They want to pay out about 50% of their profit as dividends. That's their policy. Balance dividends with keeping the company strong, you know. Back in September 2023, they paid 70 yen per share, a nice bump up from the year before. But for this year, September 2025, they're planning 59 yen per share, 11 yen less.
So they're adjusting.
They got it right. Profits are down. Share buybacks, they were buying their own stock back in 2024, spent 2 billion yen on that. Between November 23 and January 24, they even had this plan to buy up to 1.2 million shares, worth, well, up to another 2 billion yen. They say they're going to use all that extra money they have, the retained earnings, for a few things.
Like what?
Paying down debt, making their factories bigger, research and development, new products, you know, all that. Promoting their brand more, and then just having a cushion for whatever comes up in the future, maybe new opportunities, maybe even buying other companies.
Mergers and acquisitions, that whole thing.
Exactly. So what does all this tell us about SHOEI's priorities? How they treat their shareholders?
Well, it seems like they're trying to find that balance, right? They want to pay you back with dividends, but they also want to invest in the future, keep the company growing.
Makes sense. It's a classic balancing act, right? And they're doing it while buying back shares, which would be good for the stock price. Lowering the dividend for this year, well, it's a bummer, but it's realistic. They're not making as much money.
True, true. Okay, let's wrap this up. Big picture. Where's HOEI at, and what's the future look like?
Big question.
So short term, next year, September 2025, they're saying it's going to be tough. Sales, profit, down. It's the market, it's the yen, it's everything. Right now, their focus is on getting rid of that extra inventory in Japan and keeping costs under control. But long term, their strategy is all about growth. Asia, that custom fit thing, the helmet park, even new business ideas. And they want to do all this without hurting their profit margins and keeping that premium image strong.
Yeah.
Very. They even say they've already started working on those new business plans. They say their strengths are like they're good at design, they're good at manufacturing, they take safety seriously, all that made in Japan quality.
Huh.
They've got a huge chunk of the premium helmet market, like 60% worldwide.
Yeah.
And they see potential opportunities if the yen weakens, if demand picks back up, if they can raise prices even more, if they can get even more efficient, and if they can cut costs. So what's your final verdict? Where's SHOEI headed?
They're the big dog in premium helmets, no doubt. They've got a great reputation, and they're adaptable. You know, they made good money even with all the challenges last year.
Yeah.
The next year, it'll be a test, for sure.
Yeah.
But their plans, especially for Asia and these new businesses, they're interesting. They're thinking ahead, which is good.
It is.
Can they pull it off, keep the profits rolling in while staying true to their brand? That's the big question. And they seem committed to shareholders with dividends and buybacks, so that's a plus.
So what should our listener take away from all this?
Well, first, it shows how global stuff like the economy and those currency exchange rates, they can hit anyone, even a solid company like SHOI.
Yeah.
And it shows how important it is for a company to have a plan, to be flexible, and to know how to handle problems, but also how to go after those big long-term goals.
It makes me think, SHOEI, they're all about design,
Mhm.
precision, quality, right? But those new businesses they're talking about, those could be totally different. Can they use those same skills to win in like a completely different industry
Yeah,
and still stay premium?
that's the million-dollar question, right? Worth watching, for sure.
Definitely something to keep an eye on. All right, that wraps up our SHOEI deep dive. Thanks for joining us, and we'll see you next time.